Yes, good evening, my dear friends. Yeah, we reached this accounting standards revision group 1, part number 4. Yes, we are going to complete the remaining two more standards. We'll be closing it in this session of 1.5 hours. Right? Yeah, myself, Ravi Kanth Miriyala. Right? And yeah, before getting into the session, first of all, we will discuss accounting standard 11 first primarily. Then remaining time we will look at accounting standard 13. Yes, that also will cover it. Like say 1 hour for approximately 45 minutes, at least 45 minutes. We'll see. Plus or minus, we'll take care of it. And the next part, what is that? Before getting into the discussion, let's a small information as usual. Yeah, watch my next special class. My special class is available on 28th and 29th, yes, of this month. That is group 2 accounting standards revision. Yeah, that is also same. 3 plus 3 6 hours we will be trying to complete all the standards almost. Okay, right. In the special class also, yes, you can ask your question, you can raise a doubt, you can speak to us, and we will answer you. Fine. Yeah. So voice chat, do discuss doubts and concepts with educator. Ask your doubts through the screenshot. Yes, you can share a screenshot to us. We will see that. You can text. Correct, now you can voice. Yes, all kinds of facilities are available on an academy platform. Yes. So that is useful to you. That is obviously useful to you. Okay. Right. And yeah, an academy, ask a doubt anytime from anywhere. You can ask n number of doubts. Yeah, faculty is there to help you. Yeah, faculty's responsibility is to make your concept clear. Okay, that is our job, our duty. We will do that job, obviously. Right. So there are two kinds of subscriptions. One is plus subscription, the other one is iconic subscription. Yeah, plus subscription means you will get soft copy of material. Correct. We don't conduct any tests, mock test. We'll conduct the mock test, but we don't correct it. If you take iconic subscription, then we'll do all these things you will get. That is printed material you will get. Correction also, test series also will be done. A mentor will be appointed for you. All other benefits will be available for iconic subscription. Okay, right. When you are subscribing, do not forget to use the code YESHASLIVE live. If you use this code, you will get 10% off. Not only 10% off, you will get 2 months extra subscription as well. Okay, right. The same facility is available for iconic subscription. Use the code YESHASLIVE live. Okay, yes. Iconic subscription, I told you, you will get extra benefits. You will get extra benefits, that is mentoring and printed copies and evaluation of your test series also is going to take place here. Okay, this is what the matter, my dear. Chalo, let's go to the now the discussion about accounting standard 11. Okay, very important standard, my dear, very important for practical life. May also it is very important. At the same time, for practical life also it is very important. At the same time, yes, for examination also very important. Nowadays he is asking almost every 2 attempts may one attempt pakka there is a question from this standard. Yeah, sometimes continuously also 1 2 attempts he is asking a question from this standard. So better learn it properly. Yeah, and let's have a good revision of this subject. That will be obviously useful to you. It will be obviously useful to you, my dear. Fine. Yes, just a minute. Yeah, accounting standard 11. Accounting standard 11 talks about what? Effects of changes in foreign currency. Correct, na? Effects of changes. Yeah, changes in foreign exchange. Foreign exchange. Effects of changes in foreign exchange, foreign currency. Yeah, very simple. First of all, what is foreign exchange? Foreign exchange means what, sir? Foreign exchange means other than Indian currency. That's all. Other than Indian rupee. Yeah, other than Indian rupee is what? Other than that. Other than Indian rupee is foreign exchange, we will say. Simple words. Fine. 1 minute here. Yeah, other than Indian rupee, correct? No? Other than Indian rupee is going to be your foreign exchange. Perfect, sir. Huh. Okay, that's fine. And listen, being an Indian company, yeah, all Indian companies, obviously, what do? We will present our financial statements, correct? Now, we present our financial statements where we present our financial statements in Indian rupees, correct? Indian rupees. Yeah, we'll present our financial statements in Indian rupee. Now, the question, if you have a transaction with, correct, na, and we prepare and present financial statements in Indian rupee, correct? So suppose you have a foreign currency transaction, that isn't it supposed to be converted into Indian rupee? It has to be converted into Indian rupee, correct? It has to be converted. So suppose when you have a foreign currency transaction, how to convert that into Indian rupees and present it, that is what the standard is going to talk. Okay, what is a foreign currency transaction? Okay, na foreign currency transaction. What do you mean by foreign currency transaction? A transaction which is denominated, okay, which is denominated, yeah, denominated, or which is settled in foreign currency. Okay, settled means what? Settled means it is already closed. Already closed means either paid or received. It's already over, sir. That means I'm not correct. Either paid, correct, paid or received in foreign currency if it has happened. Right. Denominated means what? Denominated means agreed. Yeah, not yet settled. Agreed, but not settled yet. But not settled yet. But not settled yet. What do you mean by not settled yet? Yeah, say example, I sold goods. Yes, sir. I sold goods to whom? I sold goods to US customer. Yes, I sold goods to US customers. Excellent, sir. When you sold goods to US customers, when you sold goods to US customer, my dear, correct, na? When did you sell? Sir, I sold on 1st March. Correct. I prepared an invoice. Here I said you have to pay me $10,000. Okay, $10,000 they are going to pay us. Excellent. Okay, $10,000 they are going to pay us, which is very good. I agree to it. Correct. Na? But has he paid? No. As on 31st March, it is not settled. I sold goods. It is not settled. Maybe as per the agreement, he is going to pay money on 30th April. Settlement date is 30th April. But as on 31st March, getting my point, as on 31st March, there is no payment, but it is denominated. Correct? Isn't it mentioned? Yes, it is mentioned very clearly in the invoice. It is mentioned very clearly in the agreement that you will pay me in dollars. Yeah. Dollar is other than Indian currency, other than Indian rupee. Correct? Yes, that's why it is a foreign currency. It is denominated, just mentioned in the foreign currency. That itself is sufficient. Even though it has not yet been settled as on 31st March, that is sufficient. Okay, right. One more important point is what? Monetary and non-monetary transaction. Monetary, non-monetary. Okay, monetary, non-monetary transactions. Fine. What is monetary? First, if you understand what is non-monetary, which is not monetary, we can tell one line and close it. Yeah, generally students are not aware of what is monetary item. That is what very crucial. They have asked, if you believe or not, 2 times they have asked a question, what is monetary item? Definition they asked 2 times. And they have given some 4-5 items. Okay, you would select which is monetary, which is non-monetary. Straight to question, 4 marks question, very simple definition, and they have given examples. You have to tell which is monetary, which is non-monetary. If you are not aware of this also, you will be losing marks. That important this is. Not just for, not for only understanding purpose. This is all important for examination. Right. So what do you say? What is monetary? We say cash. Cash is monetary item. Okay. That is called, we say, what do we say? Money held. Money held is monetary item. Plus. That's all. No. Money held is one. Second one is what, sir? Yeah. Second one is what, my dear? Second one is either asset or liability. Asset or liability. Yes. Asset or liability. Which is receivable or payable. Which is receivable. Asset is receivable, obviously. Correct na? Yeah. Liability is payable, obviously. Correct. It is receivable or payable in terms of money. Okay. In terms of money. What is payable? Cash is payable. What is receivable? Cash is receivable. Money ne, only money, not money's worth. Okay. Not, sir, I will give you something in kind. Correct na? Money's worth, sir. Sorry, my dear. Which is receivable or payable in terms of money, then tell me, then that is monetary item. There is a line, what is that? Asset or liability are either fixed or measured, or they're fixed or determinable, they will tell. Determinable. What do you mean by fixed? Fixed means what? Fixed means known to me. Okay. I know. Yeah, creditor. I purchased 100 rupees worth of goods. I know I am liable for 100. It is known. Yeah, example, I'll say creditor or debtor. Understand? Yeah. It is determinable. Determinable means, what do you mean by determinable? Determinable means measurable. Yeah. Every item is measurable in the balance sheet. If you are not able to measure, it cannot be an asset, it cannot be a liability. Correct. Now you can't bring it to balance sheet only if it is not, if you cannot bring it to balance sheet if it is not measurable. Hope you understand. So if it is not determinable, got my point? Yeah. So don't focus on these two words. These two words are not important. Every item is fixed or determinable. What is the example, sir? What is the example? I'll say provision for tax. Yeah, provision for tax. Yes, it's a liability. Do you know exactly how much you will pay? I will pay something, but income tax department, correct? Now, income tax department may not agree to me. Income tax department may say, no, it is not your, you have filed your return, but I don't agree to your return. Yeah, you have to pay me another 5 lakh rupees extra. Correct. I guessed it. Correct. Suppose example, provision for gratuity. I will say provision for gratuity. Yeah, I am just based on my expectation, I am measuring the gratuity. Correct. But understand, but it is not exactly. No, exactly. Do you know how many people will retire after how many years? What will be their salary at the time of retirement? I don't know, sir. It's a guess. That is measurable. Correct. So in the balance sheet, there will be some items of very well known. In the balance sheet, there will be some items of unknown. Getting my point? Right. So tell me, yeah, what is non-monetary? Which is not monetary is non-monetary. That's all. Yeah, answer me, my dear friends. Yeah, what do you say? PPE. Yeah, PPE is a tangible asset. Correct, na? Tell me, is it a monetary? Is it a monetary? Or is it non-monetary item? And intangible assets. Is it monetary or non-monetary? Monetary or non-monetary? What about inventory? Inventory. Monetary or non-monetary? Look at the definition and accordingly apply and answer. What do you say, my dear? Tell me. Let me wait. Non-monetary. Harshit. Krishna Kumar. Non-monetary. Okay. Josna. Non-monetary. Yep. Actually, all these things are non-monetary. It is not monetary. It is not neither receivable or nor payable. It is inventory. Correct, na? If I say this is my fixed asset, which is with me already, it is not receivable or payable. Correct, na? Yeah, even inventory also. Inventory is also non-monetary only, my dear. Yeah, correct, non-monetary. Because is it receivable? How it is receivable? It is with me. Inventory is not sold. If inventory is sold, then it becomes debtor. Understand? Yeah, as of today, as on 31st March, inventory is an asset which is held by me. It is not sold, it is not receivable or payable. If it's a receivable from whom? Or it is not yet sold, yeah. Correct, na? Is it sold? Not sold. If it is not sold, then whom do you ask? Sir, once you sell, inventory only won't be there. Na? Then it is called debtor. It is not inventory. Hope you understand. Yeah, like that you have to look into. Correct. Now, what about loans and advances? Loans and advances. Investment in yes, loans and advances is going to be monetary. Investment in equity shares. Yeah, investment in debentures. Investment in debentures. Tell me, investment in equity share. What do you say? Is it liability? Is it? I mean, is it? Mm, what do you call? Monetary, non-monetary? Yeah, loans and advance is monetary. Very good, correct. Investment in equity. Investment in equity. Investment in equity is not monetary, my dear. It is non-monetary. Why? Because whom do you ask? If you purchase Reliance company shares or Reliance company share or Infosys company share, you bought it. Oh, super, sir. Can I go and ask Reliance company? Yeah. Is the Reliance company is liable to pay you? Sorry, my dear. They won't pay you. If you don't like, you should go and sell it in the market. Open market mein sell karo. But nobody is responsible to pay you. That's why it is non-monetary. Got it? Right. Investment in debenture. I can go and ask the debenture. Right, time is up. Pay me. Correct. There's a time, there is an amount, what they should pay. Everything is clear. So this is monetary. Got it? Right. So now you say provision for a tax. Provision for a tax. Is it monetary, non-monetary? Provision for tax. What do you say? Is it monetary, non-monetary? Got it? Yeah. Provision for tax. It's going to be monetary. Yeah. Because what do you pay? I'll pay money only. I don't give goods to them. Correct, na? Right. So advance from customers. Yes, advance from customers. You got advance from customers. Tell me, what do you say advance from customer? Advance from customer. Yeah, I will say non-monetary. Why, sir? Advance from customer means we give goods. Yeah, we give goods or services. Yeah, we'll give goods or services, but not money. Correct, na, isn't it? Money we are not going to give. Since money is not going to give, yeah, that's why. No. What about prepaid expenses? Someone is asking. Prepaid expense. Yeah, prepaid expenditure is non-monetary. Why? Prepaid expenses means other party. Correct. Now we get services from the other party. We get services. Yeah, we get services from other party, from others. Agree? Right. But not money. You are not getting money. It is not receivable in terms of money. That's why it is. You are going to get either goods or services only, but not money. That's the reason. It is non-monetary item only. Right. Hope you guys clear about monetary, non-monetary. Right. Now let us look at e-standard. Mein there are totally three topics are available. Three topics. Okay. Yeah. Topic number one. This is transactions by the entity. I can say foreign currency FC, foreign currency transaction by the entity. I can say simple means we only directly dealing foreign currency transaction. Okay, nice. What about the second one, sir? Yeah, what about the second one? Second one is, yeah, what do you say second one, sir? Second one is foreign currency, foreign operation. Okay, translation or conversion. Conversion. conversion of trial balance or financial statements of foreign operation. Okay, perfect. Yeah, next point. What is next point? Next point, what do we say? Forward contracts. Forward contracts. Yes, we are going to look into these three topics. Yeah, the first and foremost, this is topic number 1. Let us finish it. Yeah, topic number 1. What is topic number 1, sir? We only entered into a foreign currency transaction. Yes, foreign currency transaction. What is that? Any foreign currency transaction. Any transaction, for that sake. Any transaction. Okay. Means, what do you mean by that? What do you mean by it? Means we sold goods. We sold goods. Okay. We bought goods. Okay. We took loan. We took or gave loan. Correct now. Whatever it is. Yeah, we paid royalty. Yeah, welcome, no problem. Correct na? Yes, we got commission. Yeah, anything, any kind of transaction in foreign, is it happening in foreign currency? Is it denominated or settled in foreign currency? Got it? That's it. Then it is a foreign currency transaction which is happening. Correct na? Topic number 1 mate will come. Yeah, foreign currency transactions ko what should I do, sir? Yeah, standard tells first, as usual, it will tell initial recognition, and next recognition is what? Next is subsequent recognition, initial, subsequent. Yeah, initially what do you do, sir? Initially, try to understand, very simple. Initially, we say any foreign currency transaction, record it at the rate on the date of transaction. On the DOT, I am writing DOT in the sense date of transaction. Today transaction took place. Yes. Today what is the rate applicable? Our rate is there, sir. $1 is equal to 75, sir. 75 only you should use it. That's it. What is the rate today? Our rate only you are supposed to take it. Apply the rate on the date of transaction. Okay. Or for convenience purpose. What is the standard is telling? Correct na? Convenience. Yes. For your convenience purpose, you can use average rate. Yeah. Average rate in the sense which average? Which average means you can use weekly average. Okay. Or fortnight basis. You can use it. Or max to max monthly average you can use it. Monthly average you can use it. That's it. It cannot be more than that. Okay, right. So you can use average rate, right? Next. Today transaction happened. Maybe settlement will be correct, not a different date. Yeah, if there is any difference between what? Right, recording rate. Yeah, recording rate is different, and the settlement date rate. Yeah, there may be different rates may be applicable because everyday rate will be changed. Today I sold goods. After 10 days I got money. Correct. Well, I got money. Correct now. So now what are we supposed to do? E difference should always, remember my dear, should always be transferred. It should always be transferred to P&L. That's it. Okay. Means, yes. I'll give simple example. I sold, correct now. Instead of sold, I bought fixed asset. I bought a fixed asset. From where? From some US, sir. US supplier sent me fixed asset. How much is the worth? $1,000 worth. Excellent. Which day is this? 1st January. Okay. This day $1 is equal to 70, sir. Okay. Excellent. Then what do I record? I say fixed asset account debit to payable. I'll record today. Yeah. Today rate is 1000 into 70. That is equal to 70,000 rupees. One fixed asset. I have recognized it. Done. Next, sir. Next on 31st January, we paid money. Yeah, because we said we'll pay you after month. Yeah, we paid money. Yeah. Today, correct na? Today have you paid money? Yes, yes. Today I paid money, sir. Today I have to buy dollar from the banker. Correct na? I will not be holding dollars because I am dealing in rupees. Correct. So we bought dollars. Yeah, we bought dollars. How much have you paid for this? Sir, $1,000, sir. $1,000. Today rate is equal to $1 is equal to 72, sir. Bad luck, sir. It went up. Okay, that means 72,000 rupees you paid and you got $1,000. What do you give him? Dollars only I have to give. He will not accept rupees. Correct. So that means, correct. Now that means, what do you say? Now you say payable account debit. What you paid is $1,000 to him. Correct. Now $1,000 initially recognized as 70,000. So it has to be 70,000 reversal karna. But what you have paid, actually, we purchased $1,000 for 72,000 rupees. You have bought it. Correct. That means there is a 2,000 rupees. 2,000 rupees should go to P&L as fluctuation gain or loss, as foreign exchange fluctuation gain or fluctuation loss. May you should transfer it. Is that correct? Na? You should go to P&L as a fluctuation gain or loss. But remember, my dear, sorry, P&L na sir. This is related to fixed asset na. Right. I will put into debit fixed assets, sir. Sorry, no chance. Okay, but there is an exception. But under this exception also not possible because it is very short term. Hardly 1 year, hardly 1 month, not 1 year. Okay, sir, can I book it in the sales, sir? No, sir. Can I book it in the COGS, sir? No, sir. Can I book it into the purchases, sir? No, sir. These are all biscuits to make you, correct na, do mistake. Not at all applicable to you. Not at all applicable to you. Getting my point? These are all supposed to be charged. These are all supposed to be, correct na? This should be charged to P&L only. Any fluctuation gain or loss, that should go to P&L only. Not to the fixed asset, not to the sales account, not to the COGS account, not to the any purchases account or some nonsense account he may try to put and to confuse you. But you should be very clear. Say goodbye. We'll always transfer it to P&L. Got it? Right. That is the initial measurement part. Yeah. Then we'll go to subsequent measurement. Yeah. Subsequent. See, in these topics, no. Topic number one only major. It will take some good amount of time. Once you are through with that topic, na, rest topics will not take too much time. But this is only crucial actually. Questions will come from this area only. Fine. Yeah. Subsequent measurement. Understand? Subsequent measurement. When I say subsequent measurement, right? Subsequent measurement means on the balance sheet date. Yeah, it is on the balance sheet date. Right. So what should I do on the balance sheet date? Yeah, it is based on classification. It is based on classification. Yeah, classification of what, sir? Classification of balance sheet items, sir. Okay. How are you classifying the balance sheet items? How are we classifying the balance sheet item? We'll classify into two. Correct. One is monetary items. The other one is non-monetary items, which you have learned monetary, non-monetary definition. Yeah. If you say it is monetary item, correct na? Yeah. What do we say? We say restate it. Yeah. Restate it using what? Restate it using the rate on the date of rate, otherwise closing rate I will say. You restate it using closing rate. Better option. Rate on the balance sheet date. That's all. Closing rate means rate on the balance sheet date. Yeah. And there can be any gain. Correct na? There can be any gain or loss. Gain or loss. Again, as usual, it should go to profit and loss. Correct. If it is a monetary item. Okay, sir. Balance sheet this is. Yeah, there is debtors number. How much rupees? $1,000 are there. $1,000 into 70, sir. 70,000 rupees I noted initially. Correct. But on this is correct now. But on 31st March, $1 is equal to 67 rupees. It went down. Oh, it went down. Correct now. Aren't you supposed to restate it? You have to. Why? Debtor is a monetary item. It is receivable in terms of money. When someone gives me, what will he give? he will not give 70,000 for your information. It is not 70,000 he will give. He will give me $1,000. He is going to give me $1,000. If he gives to me on 31st March, the worth of it is actually 67,000, not 70,000. But isn't it overstated? Yes, it is overstated. That's why on 31st March, you have to recognize something like this: P&L debit 3,000 rupees, two debtors 3,000 rupees. If you do it now, automatically correct na, debtors balance is equal to 67,000 rupees ko aa jayega. It will come to 67,000 automatically. Hope you followed me. Correct na? Like that you are supposed to restate it. Yeah, in restatement, if you get any gain or loss, that gain or loss should be transferred to P&L. Okay, what about non-monetary item? Yes, it is a non-monetary item. Now the question, it is based on, again further, it is based on measurement basis. Okay, how are you measuring it? Sir, I am measuring at cost. Historical cost basis we are measuring. Then we say, do not restate, my dear. Do not restate. Sir, you said do not restate. What do you mean by do not restate? Initially, you must have recognized 70,000 or 80,000 or something you must have recognized. Correct. Then continue the same. Continue initial recognition. That's all. Continue initial recognition. You will be continuing initial recognition. You will continue initial recognition. Got it? Right. Sir, what about this? Next one is, sir, we are measuring it at NRV or fair market value. We are measuring. Okay, no problem. If you are measuring at NRV or FMV, then use the rate on the date of value. Use the rate on the date of valuation. Use the rate on the date of valuation. We will tell. Okay. Right. Generally, which date you will value? Nothing but balance sheet date we will value. That's why we will be applying closing rate for valuation. If it is measured at NRV or FMV, obviously, then only we'll go with closing rate. Otherwise, no way it is going to be remeasured in case of non-monetary item. Okay, right. But there is an exception to this rule. See, so far what we have learned, this is important because recently also one question came. Okay, 6 marks question came. Good one. Right? You need to be aware. If you are not aware, again, obviously, as usual, I told you, you will be losing some marks. Yeah. What is that? Listen. Yeah. So far, what is that we said, Amma? So far, what we said, any fluctuation gain or loss. Correct? Any fluctuation gain. Any fluctuation gain or loss. That will be transferred to where I said, yes, we will transfer it to P&L. Okay, sir, perfect. We will be transferring it to profit and loss. But, okay, but there is an exception. There is some 46, para 46. Yeah, para 46 or 46A. Yeah, there are some 2 paragraphs of the accounting standard 11. Yeah, they have given an option. It is an option, my dear. What is it? Option. It is option. When I say option, it is not mandatory. It is not mandatory. Okay, there is an option. Fine. So as per this option, yeah. So that is, it is up to the wish of the entity. If they want to take it up this option, let them take it up. If they don't like, let them not take it. Okay, it's not mandatory. We do not force you anything. Okay, what is that option? Yeah, if you take, yes, again, the option once you take, it is irrevocable. Yeah, irrevocable. Let me correct it. Yeah, irrevocable. Irrevocable means what? You cannot reverse. You cannot reverse. Sir, I took it by mistake, sir. Sorry. I will follow again normal P&L. Sorry. Once you take it, you have to follow it. Got it? Next, you have to apply on all items. Okay, na? All items. That means there is no choice. No choice of selecting. Sir, there are 4 items, sir. 4 items mean 2 items ko I will follow, sir. 2 items I don't want to follow, sir. Sorry, my dear, get lost. Okay, na? No, that's what. Think 100 times before you choose this option. Next, if you follow, correct? If you have chosen, if you follow, then you should follow prospectively only. Retrospectively not required. Prospectively only means. Prospectively means what I say. Prospectively means from now onwards. Yeah, whatever last year I charged to P and L, sir. Last year charge na last year ka chhod do. You're following from current year na current year onwards you follow this. Okay, fine, sir. Again, the option is available. You told what is this option, sir? Basically, the option is for long-term monetary items. Long-term foreign currency. You write one more word better. Long-term foreign currency monetary items. Foreign currency monetary items. In simple, LTFCMI. Okay, it should be long term. It is applicable only for long term. Long term means what? Yeah, 12 months or more than 12 months. Yeah, about 12 months hai to it is long term. Correct now. Up to 12 months it is short term. Okay, foreign currency means other than Indian currency. Monetary item means correct. When I say monetary item, this can be an asset or it can be a liability. Correct na? It can be an asset or it can be a liability. It is not necessarily always liability. No. It is not necessarily always liability. It can be an asset. It can be a liability. Remember. Okay, fine. So that means for short term, correct na? For short term. Short term like debtors, like creditors. Sorry, e rule is not applicable to that. That means what do you do? For these items, any fluctuation, any gain or loss, you should transfer it to P and L always. You should transfer it to P and L always. Okay, right. Now, what do we do now? Yes, exactly. Yes, my dear, try to understand it. Yeah, try to understand this concept. Yeah, option may there are two things. Okay, situation number 1. What is that? We have taken loan or borrowing. Yes, this is directly related to directly related to what, sir? Again, e loan is in which currency? It is a foreign currency loan. That is important. You took the loan in foreign currency. Directly related to a depreciable asset. Yeah, depreciable asset. It is directly related to depreciable asset. Okay, that means what about this? This is for any other reason. Any other reason. Any other reason means what? You must have taken a loan, but not for depreciable asset. Maybe some other things. Correct na? You have taken loan, not for depreciable asset. Yes, agree. That is one. Or you have given loans in advance. You gave loan. Any other, because monetary item, when I have mentioned clearly, monetary item, when I say monetary item is what I said, monetary item is what? It's an asset or liability. It can be asset. Correct. If it is an asset, sir, asset means only second reason you will fall under. Asset means you will fall under only second reason, because first reason may it is loan taken will come, not loan given. Loan given will not come under first category. Okay, fine. So what to do? If you have taken option, if you have chosen this option, if the entity has chosen this option, okay, yeah, what should I do, sir? Very simple. Any fluctuation, gain or loss. Any fluctuation, gain or loss. Right. Generally, you'll transfer it to P and L. Now don't transfer it to P and L. Oh, what should I do? Yes, you should add or deduct. Otherwise, you say debit or credit. Yeah, debit or credit. Debit or credit to what, sir? Debit or credit to fixed asset, the depreciable asset. Fixed asset ko debit credit karo, that's it. Oh, everything correct. Now, generally we'll say P&L account debit, P&L account credit. Now you will be adding it or deducting it, plus or minus you will do, to the fixed asset, to the depreciable fixed asset, but not with profit and loss. That is what the treatment you should do if you have chosen the option. Okay, right. For any other reason hai to what do you do? Yeah, ide gain or correct, same gain or loss, gain or loss. Again here also I say you should not transfer it to P&L. Oh, is it? Then what should I do, sir? What should I do, na? Transfer to, you will be transferring it. Yeah, you will transfer to what? You will be transferring it to a new account called FCMITD account. What is this account? FCMITD account ko transfer karna. What is this, sir? FC means foreign currency. MI means monetary item. TD means translation difference. Yeah, translation difference. FCMITD means translation, foreign currency, monetary item, translation difference account ko you are supposed to transfer. Okay, right. Then what should I do? FCMITD, what should I do, sir? It should be amortized. Amortized over what? Over the remaining life. Over the remaining life of this monetary item. Correct now? You gave a loan given means there may be 5 years time. 1 year is over, that means remaining is equal to 4 years. 4 years may charge it to P&L. Yes, it should be amortized over the remaining to P&L. Profit and loss ko you transfer it, means the effect is not given in first year itself. Effect is spreaded over the 4 years. Effect is spreaded over the 4 years. Hope you have followed. Correct? Yes. Give me a second. Yeah. Effect is spreaded over the 4 years, but not hitting the profit and loss in the right 1 year. May it is not going to hit. Yeah, this is what FCMITD ka one question, only one question, one question. I think 2 times the same question has been asked. 2 times they have asked. I don't know whether it is. I think examination question. Yes. Examination question only. Examination question only they have asked. Got my point? Right. That is the matter. Right. So now, right. So that's all about the option. If you have taken the option, you are supposed to follow like that. Yeah. Then topic number 2. Let us look at topic number 2. What is topic number 2, my dear? Topic number 2 is conversion. Correct, na? Conversion of what? Conversion of financial statements of foreign operation. Of foreign operation. Yes. What is a foreign operation? What is a foreign operation, my dear friend? Foreign operation is foreign subsidiary. Correct, na? Foreign operation is foreign subsidiary. Foreign joint venture. Foreign associate. Correct? A foreign branch. Yes, foreign branch. Correct? Yes. The foreign branch is part of your CA inter syllabus. Yeah. This is all part of CA final syllabus. So right now you are in inter, so forget about that. Yeah. So what are we supposed to do? You have to convert it. Why, sir? Why means my foreign branch, they prepared books of account. Correct. Now how did they prepare? They prepared books in which they prepared in foreign currency they prepared. Yeah, true. So then they have prepared in foreign currency. I am preparing it in rupees. Am I supposed to translate it and do it? Yes. So that's why what are we supposed to do? First, yeah, e-conversion. E-conversion, whatever we are talking, from foreign currency to Indian rupee. Correct. Now from foreign currency to Indian rupees. Yeah, e-conversion is based on the classification. It is based on the classification. Yes. This is based on the classification of what? Of foreign operation. Yep. So this foreign operation may be classified into integral, and this is non-integral foreign operation. Correct? Right. Tell me, integral means independent, dependent. What do you say? Integral means independent, dependent. Yeah. What's your answer? There is a time gap actually between what I ask and what you answer. I mean, the time you answer. Okay. Muhammad Sharif and Krishna Kumar, all of them told dependent. Correct? Na? It is dependent actually. Dependent. Yes. Excellent. Dependent. If it is dependent, means here what we say? Here we say what? There is no difference. There is no difference between what, sir? There is no difference between HO and branch. Both are one and the same. Okay. That's why how are you supposed to convert it when your conversion? Yeah, when you take trial balance, that is financial statements, I say. Correct. Now, what you will do? We will cut this into balance sheet items. We'll do this into profit and loss items. Okay. Yep. Yeah. Profit and loss items, what you say? Use the rate on the date of transaction. But practically not possible. Rate of transaction. That's why are you apply average rate? Yeah. This only will apply. They will give in the question. We'll apply the average rate. Transaction means lakhs of transactions may be taking place. Then every day 365 days, otherwise 365 days showed though, holidays, Sundays will be there, means 250 numbers I have to provide me, which is illogical and impossible practically. Correct? Na? Balance sheet items ko what do you do? As usual, will bifurcate. One is monetary item, next one is non-monetary item. Same what I have explained on the top. If my company deals with foreign currency transaction, how it happens? Same effect has to happen. That's all. So monetary items means what? Use closing rate. Closing rate. Yes. The non-monetary items are non-monetary item again. Have you followed historical cost? Have you followed NRV or FMV? NRV or FMV now. Accordingly, same concept I told you. Na? Exactly same. Nothing new to us. Sir, historical cost. Historical cost means rate on DOT. Rate on date of transaction. No, sir, here. Then if this is the one, then you will apply closing rate. Right. Obviously, because for one item, one rate you are using. Correct. Now, for one item, you are using one rate. Your trial balance, do you think it will match? Impossible. It will not match. So there will be difference. There will be difference in trial balance. Our difference, transfer it to P&L. That's all. You have to transfer that to profit and loss. You have to transfer that to profit and loss. If it is a dependent branch, that is called integral foreign operation. Integral foreign operation. Got it? Right. Sir, if it is non-integral foreign operation, non-integral means independent. Independent branch. Independent branch means what? They do their business. They do their business. They do their business mostly on their own. Yes, majorly, mostly on their own business. They will only procure the material. They will only manufacture. They will only sell it. They will only collect it. Correct? Everything. They will advertise it. They will fix the prices. There will be less transactions between HO and branch. Such kind of branch is called non-integral foreign operation, which is independent branch basically. Okay, so since it is independent branch, what do you do, sir? Yeah, here also same thing. Correct, na? It is like P&L items and balance sheet items. P&L items, same in the sense, take average rate. Okay, sir, balance sheet items, we don't bifurcate non-monetary item and monetary item. Both are one and the same to me. Why? Why means, I'm an Indian company, correct? I invested in the foreign branch. My branch is doing the business. I'm not bothered at all. Correct. And they are doing their own business. Properly they are doing business. Means, how do I look at the branch? I look at the branch like an investment. Kya bola? I look at the branch like an investment. Correct. It is an investment in the branch. Yes, that's why I just investment means, what do you do? Suppose I invested in Infosys company shares. Do I bother Infosys company में debtor is there, fixed asset is there, intangible is there? Why will I bother यार? What is the rate today Infosys company का share value कितना? At what rate I bought it? That's all. That's the reason we don't care monetary or non-monetary. Yeah. Both we are going to measure. Both we are going to measure at closing rate. Yes, we are going to measure it at closing rate. Right. And obviously because of this, there will be difference. E difference will transfer it to FCTR account, foreign currency translation reserve. Foreign currency translation reserve account ko will transfer it. Got it? Right. It is a reserves. It is part of reserves and surplus. Okay. First point. It can be positive. It can be negative. Correct. Then what do you say? Hold this reserve. Okay. Now hold this reserve. Right. Till foreign operation is disposed of. Yeah. Till it is disposed of. You sell it off. Hold it. Right. Sir, I sold partly, sir. Partly. Correct. Na? Right. On disposal. On disposal. Yeah. Whether it may be full disposal or part disposal. Full or part disposal. It is a full disposal or part disposal. What should I do? Then transfer to P&L. That date you transfer it to P&L. Till that time, please do not transfer. Please hold it in the financial statement. Balance sheet mein you are supposed to hold it. That is the matter. Got it? Yes, that is the matter. Fine. Yes. Let's get into topic number 3. Yeah. Topic number 3 is forward contracts. Forward contract. Yeah. What is forward contract? What do you mean by forward contract, my dear? What do you mean by forward contract? Forward contract means what? It is an agreement. Yes, it is agreed today. Correct. Today, agreed means what have you fixed? What have you fixed? We fixed the rate and the settlement time. Yeah, today we went to the banker. We said, correct na? And correct now. We said what? Sir, we will be giving you $1,000. We will give, sir. Okay. Then banker will buy. Banker will do what? Buy. Yeah. If you say I want, means banker will sell it to me. Then I will buy. Correct. I will buy. They will. Correct. Now, one person should be selling. Another person. We give means what? We give means we sell. We are sellers. Banker is a buyer. Okay. What you fixed today? You went to banker and what you spoke to them? Sir, I spoke to them. I spoke to them what? $1,000 we will give you. Fine. When means, sir? On 30th April I will do it, sir. I will give it to you. Fine. So that means settlement time. Which date? 30th April will fix. Tell me, sir, $1. How much do you? At what rate do you buy from me? Yeah, rate. If this is rate, he'll say $1, Ravi. $1, Ravi. I will buy from you at 70, irrespective of the market. On the date, market may whatever the rate, I will pay you 70. Okay, super, sir. E70 is called forward rate. E70 is called forward rate. What do we call? It is forward rate. Understand? Yeah, that is the forward rate actually. Okay, cool. Right? It is the forward rate. So now when you enter into forward contract, first what do we ask? Na? What is the purpose here? Why do you enter into forward contract? Hmm? It is purpose based accounting. What is the purpose? First purpose what we say? Sir, hedging, sir. Hedging, sir. Hedging. Hedging means what? Hedging means risk reduction. Risk reduction is called hedging. Yeah, we have risks, sir. Foreign currency risk is there. We entered into forward contract so that I can reduce my risk. That is purpose number one. Next purpose, what is next purpose here? Do you remember? What is next purpose? What is that? Hmm? Exactly. Speculation. Yeah, that is speculation purpose. Got it? Speculation purpose. Yeah. Yes, you people answered. Trading purpose or speculation purpose. Exactly. Both are one and the same. You can write trading also, no problem. Right. Listen here. If it is for the purpose of hedging, hedging, then blind rule. Simple. Straight away you remember this. No confusion, nothing. What is that exactly? If you correct na risk reduction is there na, yeah. What do you do? First you determine, are you getting a gain, is it a loss? Okay, yes, means see example, are we buying or are we selling? Okay, could be. That's why what do you do, sir? Spot rates are and forward rate. Yeah, spot rate, forward rate. Spot today if I buy, I'll get for 70, sir. Forward is equal to 71 rupees, sir. Forward is equal to 71 means we are buying, we are buying, we our side, correct na? Both our side. If you are a buyer, if you are a seller, you should be reading the question very carefully. Generally student read it, if you don't read carefully na, pakka obviously answer will be ulta aa jayega. Gain place mein loss, loss place mein gain will come, then he will 4 marks place mein 0 will come. Correct na, obviously, right? That's the reason. So if you buy today 70 ko you can buy, but forward agreement is for 71. That means it is a loss. It is a loss. 1 rupee is loss to me per dollar. 1 rupee is a loss. Sell. Sir, if you sell today 70 ko sell kar sakta. But banker what he says, you sell me later at 68 rupees ko sell karo. This is also loss. Correct na? This is also loss. So first, that's what we say. You determine what is the gain or loss. You determine what is the gain or loss. Got it? Okay, sir. Yeah, this is loss per dollar. Then what you say? Then you say total loss. Sir, $10,000 na, sir. $10,000 means 10,000 rupees. Yeah, here it is equal to 20,000 rupees. Yes. So what are you supposed to do? E20,000, E10,000, whatever it is, this number, amortize it. Amortize it. Amortize it. Amortize it what? Amortize it over the period of contract. That's it. Over the period of contract, you just amortize it. Suppose our period of contract is equal to 4 months. Excellent. When did you enter the contract? 1st January entered, sir. Okay, 30th April I am going to close it. Excellent. But see here, there is a middle May of 31st March is there. That is what our problem always, correct, which creates problem to us. Right. E side 3 months are there. E side 1 month is there. Total loss is how much? Correct. Now total loss is equal to 10,000. Yeah. Then 10,000 into 3 divided by 4. That is equal to 7,500 rupees will go to profit and loss of this financial year. And 1 month means automatically remaining number. Yeah, this also will go to profit and loss of that next financial year because it is for the month of April. Na? Bifurcate it. you are supposed to bifurcate it based on the time. Correct na? What do I say? Allocate. Allocate. Allocate based on time. Based on time you are supposed to allocate it. That's all. It is that simple. Okay, right. Let's go to the sir, speculating, your speculation business, sir, I am doing. In case of speculation business, no my dear, yeah, first spot rate is not relevant. We don't look at spot, not at all. We'll never look at spot. Oh, is it? Then how do you, then what do you say here? Also will determine gain or loss. Oh, is it? How do you determine? Very simple. What do you do? The gain or loss is equal to, forward rate. Yeah, forward rate means which is agreed upon, minus today market rate. Right, today market rate. Yeah, today market rate. Market rate of forward. What is today market rate of forward? Yeah, that gain or loss you will be correct now. Today market rate you will take, but you will not take spot. Spot is irrelevant. I told you na. Spot is not relevant. I wrote very, very, very clearly. I wrote very, very, very clearly. Got my point? Yes. So, e gain or loss. Getting my point? This gain or loss, what are you supposed to do? Transfer. Yes, obviously we'll transfer it to P&L. Yeah. Today, say example. Yeah. Sir, forward rate today is equal to, sir, 70, sir. Okay, this is forward rate. Yeah, today forward also, today market rate also 17, obviously. Today there is no difference, gain or loss. Okay, fine. Forward rate is how much? 70. Yeah, same 70. Yeah, there also say 70. Correct. But market rate, it went up to 72, sir. Okay. Suppose this 2 is a gain. It depends on whether you are a buyer or seller, obviously. It depends on gain. Okay, 72, 2 rupees, transfer it to P&L. Simple. Sir, it became 73, sir. 73 means there is a gain of 3, correct? But this is total gain, isn't it? Total. Minus already have you recognized 2? Yes, I recognized already in the last year. Correct. So that number cut karo. Correct. Now cut karne ke baad, what is this? This is for the current. This is a profit. Correct. No problem. This is profit for current year. Yeah, even you transfer it to current year profit and loss. Current year profit and loss ko you are supposed to transfer it. This is the simple and straight rule with respect to what? Foreign currency forward contract. Okay, my dear. Right. I'll explain you one more important concept which is linked to accounting standard 16. Yesterday I told you. First that we'll learn it. That is more important rather than accounting standard 13, I should say. Okay, right. Yes, my dear. What are we supposed to do? Yeah. What is that? Accounting standard 16 May, I told you 2 times they have asked 5 marks question. 5 marks question. That is based on, do you remember yesterday I told you? Right? What is that I told you? Foreign currency difference arising from foreign exchange difference arising from foreign currency borrowing, to the extent it is regarded as correct. That is what we are going to learn now. Okay, listen carefully. Yes. So accounting standard 16 May, this is 5th point of borrowing cost. Yesterday when we were discussing, I discussed it, but I told I will explain it after accounting standard 11. This is the right time. What is it, sir? Yeah, foreign exchange difference on foreign currency borrowing. Yeah, to the extent regarded as. To the extent it is regarded as borrowing cost. This is the line. Read through the line once again. One time, two time, three time. Just go through this line once again. Try to understand what it means. Right? Hope you read it. See, foreign exchange difference I told. Yeah, what did I say? Foreign exchange difference I told. Yeah. Means what? One small example will explain you better. Yes. Suppose say, let me say some $10,000 you took. We took loan. We took loan. From where? From foreign bank. From US. USA there is a one bank say we took it. Sir, why did you go to US to take loan? Correct, na? Say 114 you took the loan. Okay, welcome. Right. Why, sir? Why, sir, means sir, they are charging hardly 3% only interest rate. Yeah. Developed countries may interest rates are always lower. Correct. See, when the loan rate itself is 3%, if you make a fixed deposit with the banker, what do they give? They will give 1% to you. Understood? Obviously. Correct. Now, because they cannot give you 10%, no? If you make a fixed deposit, 1%. 1% ke liye who will make fixed deposit? That means they will say, if you have money, don't come and deposit with the banker. They don't encourage it. It is like what? Go and do business. That's all. Go and do business. You understood my point? Go and do business. That is the only way. That is the only way. Yeah, if you have money, correct now. Yes, yeah, you purchase one building, rent it to some people and take the rent. But don't come to bank. That is the style. That's it. Okay, right. Somehow we are supposed to do business, but just by keeping the money in the banker and I will enjoy bindas life. No, not at all possible. Okay, fine anyhow. Yeah, 3% US bank is giving. That's why we went there. Okay, so what is that Indian bank was giving you? What is the Indian bank was giving? Sir, Indian bank they were charging for the time being. I'll keep some 6%. I'll keep. I may change it. Indian bank is charging 6%. That's why I went to US. Nice, no problem. Okay, which day you took 1.4? 1.4, what is the dollar? $1 is equal to 70. Agreed. So today when you take loan, what do you say? We got cash. Yes. That is equal to $10,000 into 70. That is equal to 7 lakh. Yeah. To loan. Yes, you have taken loan. That is a liability. Agreed. Right. All fine, sir. Next. Today 31st March aa gaya. Balance sheet date. Whether you like, do not like, we are supposed to do our job, isn't it? Yeah, we are supposed to do balance sheet. Balance sheet date mein first loan is a monetary item. Correct? Are you supposed to restate it? Yes, I have to restate it. Correct. Now, you restate it using what? Using the closing rate. Yes, I have to use closing rate. The 31st March, what is $1? $1 is equal to 72. Okay, nice. So in this restatement, what is happening? There is a loss. My loan goes up, na? Correct. There is a loss. How much is the loss? Sir, $10,000, sir. $1.72. 70 was old rate. That means 20,000 rupees is my straight away loss, sir. What is this? This is foreign exchange difference on foreign currency borrowing. Isn't it foreign exchange difference on foreign currency borrowing? Yeah, read the line what they told. Foreign exchange difference on foreign currency borrowing means 20,000 may some extent, to the extent means some extent means out of 20,000 rupees some part will be treated as borrowing cost. That is what the matter here. Hope you are following me. Some part will be treated as borrowing cost. Okay, how much? What part? Yes, I will discuss. And are you supposed to pay interest? Yes, I am supposed to pay. How much is your interest? $10,000 I took. So into 3% means $300 I will pay. Correct. When are you paying? Today I am paying. So 72. Correct na? So what is your payment? What is your payment? We'll say $300 into 72 rupees will do. Okay, 300 into 72. That comes to 21,600 rupees will come. Yeah. Suppose example. Loan is for qualifying asset. If this loan is for qualifying asset, then what do you do, my dear? What do you do? Interest, we will capitalize it. Agree? We will capitalize it. Otherwise, we will charge it to P&L. That we learned yesterday. If it is directly related to acquisition, production, or construction of a qualifying asset, it should be capitalized. Agree? Yes. So that is what we will be doing. It is into 72. Yeah, into 72. Right. Listen carefully. Assume this will be capitalized. Now the question is, sir, all correct, but out of 20,000, how much is BCSR borrowing cost? For that, what are we supposed to do? Yeah, instead of 6%, 5%, let me take it. Yeah, see, if borrowed in India, what would have happened? Correct. Now we must have taken a loan amount would have been 7 lakh. Agreed. Then what is my interest cost? My interest cost would have been 7 lakh into 5%. 7 5 is 35. So that is 35,000. Yeah, entire 35,000 would have been capitalized. Do you agree? Correct. Entire 35,000 is getting capitalized. But because I have borrowed from outside India, now you are capitalizing how much? 21,600 you are capitalizing. That means something is missing. True. What is missing? What is missing is difference between these two numbers. Minus. So what do you say? 35,000 minus 21,600, that comes to 13,400. 13,400. Correct na? Out of 20,000 rupees out of 20,000 rupees foreign exchange difference 13,400 you treat it as, okay na? What are you supposed to do? Treat as borrowing cost. Treat it as borrowing cost and capitalize it. Okay, right. Sir, what about the balancing figure? What is balancing figure? 20,000 minus 13,400 comes to 6,600. It will come. Yeah, 6,600 is a foreign exchange difference, and we'll transfer it to P&L. Yeah, I'll put it in journal entries. Then you may catch it much better. Right, like the exactly same question with number difference he asked two times. Be very careful. Right, if you don't understand, once again you please watch the video, then you will be able to understand it. Okay, very important for examination, very important. Listen carefully. Yeah, interest is capitalized. Yeah, true. So then what do you say? QA account debit. Interest expense placement QA account I will say. Yeah, to cash. How much? 21,600. 21,600 I will record. This is journal entry number 1. Are you supposed to restate your loan? Yes, sir, I have to restate. So loan account I am crediting 20,000. But out of 20,000, you are capitalizing with QA, that is equal to 13,400, and the rest profit and loss, that is equal to 6,600. This is the balancing figure. Like this journal entry you are supposed to record it. Is that clear? Perfect. Now, okay, next question. Suppose, sir, if Indian borrowing rate, Indian bank rate. Indian bank rate. It is not 5%, sir. It is 7%, let me say. Example. Okay. Then under that circumstance, what would have been my interest? My interest would have been 7 lakh into 7 percentage. That would come to 49,000 rupees. It will come. Okay, 49,000. Now, E 35 place may you are supposed to keep 49,000. Correct. 49 minus 21,000, how much will come? 49,000 minus 21,600. If I apply, E number will come to 27,400 will come. Agree? Correct. But 27,400 is the difference. Imagined. It is an imagination number. Have you really taken borrowing from India? No, no, no. But what is the actual exchange difference you faced? 20,000. Yeah, what you thought of to be borrowing cost 27,000. But anyhow, what I lost is 20,000 only, na? Not 27,400. Na? Under that circumstance, my dear, entire 20,000. Now, in this case, what are you supposed to do? Entire 20,000 treat it as borrowing cost and capitalize it. And please capitalize it. That is what you should do. Okay. What is the journal entry you will pass now? Yeah, first journal entry will be same. Yeah, the above one. Okay, right. Second journal entry, what do you do? Then we will say QA account debit 20,000. Yep. To loan entire money, correct? Na 20,000. That means here no foreign exchange difference to profit and loss. Nothing is going to be transferred to P&L. Remember, this question can be asked. Okay, it's been a long time, so they may ask you this question. I feel this is most probable as per my guess. It's end of the day guess only. No one knows your paper other than the paper setter. Fine. Yes. So better you be ready with this questions and go attempt. Fine. You will get full marks. Hope you have understood, my dear friend. Correct? Right. Now, that's all. We are through with accounting standard 11 perfectly. And accounting standard 16 may some small point was pending which is important for exam. That's why I have completed that part. Still we are left with some 10-12 minutes, or still we are left with some important point from where accounting standard 13 say. Accounting standard 13, investment accounting. Yeah, some important points. 10-12 minutes, na? Yeah, we'll try to clear some important points. Do you have any specific point? Sir, you teach this, means I'll teach that only. Tell me, let me know any specific point from investment accounting. Do you have any specific point? Reclassification of investment. Yes, my dear, I'll handle that. Yes, that is good point, and that is actually repeated in examination also 2-3 times. Reclassification of investment. Good. Now look at this. What is reclassification? Reclassification means change in classification. Change in classification. Yeah, what do you mean by change? Change means, sir, earlier it is a current, correct na? Earlier it is current investment, now we are changing it to long term investment. One possibility. Second, earlier it was long term investment, now we are changing it to current investment. Second possibility. Agree? Yes. So now what are we supposed to do here? Yeah, what are we supposed to do? Simple ma. Reclassification, reclassification, it can take place. It can take place at any point of time. At any point of time. Agree? It can take place at any point of time. Obviously. Right? It can take place at any point of time. Simple. Sir, it is happening on 31st August, sir. Excellent. Now, simple, what you should do, na? Assume 31st August is 31st March. Okay. Okay, na? What are you supposed to do? Assume 31st August as 31st March and value it on old classification. Old classification. You value it on old classification. Okay, sir. What comes to balance sheet? What do you get in the balance sheet? Number is the cost for next classification. It is the cost for next classification. Getting my point? It is the cost for next classification. That's it. I'll explain you. Okay. Yeah. Let me take the first one. That is current investment. You are reclassifying it as long term investment. You are doing it. Excellent. Yeah. How do you say today only 31st March you assume? Current investment, how do you value? Will value at cost or FMV, whichever is lower. Okay. Situation number one, situation number two. Okay. Now what do? Cost is equal to 1000. What is your FMV? FMV is equal to 1200, sir. FMV is equal to 900, sir. Correct. What will be in the balance sheet? What will go to balance sheet? What will go to balance sheet? Whichever is lower only will go. Which is lower? 1000. Yeah, here which is lower? 900. Correct, na? Then E1000, you understand? E1000 will be the cost to long-term investment. That's all. Okay. Next, E900 will be the cost to long-term investment. Followed? Hope you followed. That is only the cost to long-term investment. Means, as you know, long-term investment, what do? Long-term investment, isn't it always measured at cost? Correct. Cost means which number is cost? Not correct. Now cost does not mean 1000. Forget about the old cost. Now onwards we'll assume 900 only the cost. That's all. 900 only will be presented in the balance sheet. 1000 you forget it. This is part number one. Current investment to long-term investment, you should do like that. What did I do? I assumed date of classification as reclassification as balance sheet date and measured the old classification as what is the rule for old classification. That's all. Exactly same thing I have measured it. Exactly same thing I have measured it. Getting my point? That's it. So same thing I have measured. Whatever is the outcome, whatever is the outcome, that outcome will become cost to the next classification. It's going to become cost to the next classification. That's it. Okay. Then second situation. What is second situation? Long-term investment is getting classified as current investment. Okay. Perfect. How do you measure long-term investment? What are the rules of long-term investment? We'll measure always at cost. We'll measure always at cost. Agree? Yes, sir. We'll measure it always at cost. But if there is correct, if there is any any, actually other than temporary we use. Yeah, for understanding purpose I say permanent. If there is any permanent diminution in value, if there is a permanent diminution in value, got it? Then what are we supposed to do? If there is a permanent diminution in value, then we will say reduce it or provide it. Correct? Reduce it or provide for that. That is what we do. Okay, sir. Listen carefully. Situation number 1. Yes. Sir, what is the cost? Cost is equal to 1000 rupees, sir. Yeah. Situation number 2. Cost is equal to 1000. Now I'll ask. Array, do you have any permanent diminution? Permanent diminution is there? Sir, no permanent diminution, sir. Oh, is it? Okay. Then what will go? This is next 1000. E1000 will be the balance sheet number. Agree? Right. E1000 number is called book value we will call. What do we will call? Book value we will call. Fine. E1000 will be balance sheet number. This will be taken as cost to current investment classification. Next classification ka cost is this number. Cost to current investment ka classification ka cost kitna? This much. 1000 only will take. Come to situation number 2. Yeah, is there a permanent diminution? Yes, there is 150 rupees permanent diminution. Cut it means 850. The 850 will be the current cost to the current investment classification. Yeah, standard में क्या बोलेगा? They will tell what? They will tell cost or book value or carrying amount. Book value, carrying amount, both are on the same. Whichever is lower should be taken. Array, lower only will go to balance sheet first. Agree? They should have told one simple line. Your carrying amount will become the cost. Obviously, because correct now, more than the cost you cannot recognize, no. That's it. So they, in the text, if you read either my text or standard or any text, they will tell cost or carrying amount, whichever is lower is written. That is nothing but what is that? Book value. Yes, right? Like this you are supposed to do. Have you understood, Krishna Kumar? Yeah, any other small point in 2-3 minutes time or 5 minutes time I can explain? If any one of you want any small point, you just let me know. I'll clear that. Wait, one more small point I'll tell. Because any question, right? Pre-acquisition, pre and post-acquisition income. Post-acquisition dividend. Yeah. Actually, pre and post-acquisition dividend concept, no? Only theoretical concept. Is such concept, practically we never follow it. Fine, it's okay, what can we do? Correct, na? Practically we never follow this concept. But yes, let me explain. Pre means what? Pre means simple. Pre means dividend related to dividend income, correct na? Dividend related to before acquisition, dividend received. Yeah, dividend received is related to before acquisition date. We got dividend, but our dividend is pertaining to before acquisition date. What is it? Means what, sir? Means, see, this is date of acquisition, DOA. You acquired. When did you acquire the shares? On 30th/4. Okay. Yeah. Have you got the dividend, sir? Yes, sir, I got dividend. Here we got dividend. Yes. Which day you got, sir? 30th 6 I got the dividend. Excellent. Correct. Dividend received. But the dividend is related. This, let us say, this is 2019-20 financial year. This is equal to 2020-21 financial year. Yeah. In which year you purchased? Sir, I bought in 2021, sir. But dividend what you got it, this is related to which year? 2019-20 financial year ka related, sir. Oh, yeah, it is related to last year. Correct, na? Period. What is this period? That is equal to 1/4/2019 to 31st March 2020. Is this period before your date or after your date? Correct. Now, this is 34/2021 you bought it. Yeah, this is coming before. This is called after. Agree? Yeah, that's why we call it as pre-acquisition dividend. Pre-acquisition dividend. If it is pre-acquisition dividend, yeah, pre-acquisition dividend, you should not transfer it to P&L. Okay. Then what should I do, sir? Yes, you deduct it. What are you supposed to do? Deduct it. Deduct it from cost of investment. Cost of investment, say you have to cut it. Means what is that? Dividend received means, correct, na? Dividend received means what? What you received? What you received means cash only received. Sir, what else will receive? Obviously. Correct, na? Cash received. Two, sir, to investment account you are supposed to record. Cash account debit, investment account credit. If it is before acquisition, look at which day you acquired. Yeah, which day you got it. Yes, sir. And it is related to which period? Period is coming before or after? Before. Before means pre-acquisition. Credit investment account. What should I do? You have to credit the investment account, but not dividend or profit and loss. Okay, but not dividend or profit and loss. Fine. Next, what is next? Post acquisition dividend. Yeah, see, now when did you acquire? I'll say, yes, sir, I acquired in 2020-21. When did you acquire? Somewhere in the April month you got it. Fine, sir. Yeah, I got dividend. Yes, you got dividend. Yeah, which day you got, sir? I got dividend on 30th August 2022 I got, sir. Okay, 2021 I got it. Yeah, here. This is 21-22 financial year, na? Correct. But when is this your date of acquisition? I bought in the last year only I bought. Yeah. Dividend is pertaining to which year? This is related to, correct, na? This is related to 2021. Yeah. In 2021, are you already owner? Yes, I was a owner. In 2021 only I was already owner. Correct, na? Now see, period is this, na? Yeah. Is it coming after only? Yes, it is after. After means post. Yeah, post. That's why. Which day you got? 38th you got it. Then you transfer it to P&L. You are supposed to transfer it to P&L. That's all. Yeah. What is the reason? Why do you credit to investment means? Simple reason. Try to understand. Yeah. Anyhow, good question. Yes. See, my dear, just simple. Who is this Ram? Okay. Ram was holding it for the full financial year. Excellent. Okay. Ram sold me in the month of April. 1 month, 2 months before Ram was holding it for the full year. He was only the owner in this full financial year. Till he sold it to me, Ram was the holder of the share. Agreed. Yeah. When Ram is selling to me in the month of April, correct, na, where the dividend is due within a month or two. Okay, na? Say example, June month mein dividend is going to come. Generally every year a company will give in the month of June. Right. Tell me, Ram, do you think, why, right, so generally dividend how much will come? 20 rupees dividend will come. Correct. We know 20 rupees pakka company is going to pay me dividend. Okay, excellent, sir. Right. But you are selling 2 months before only you are selling. You are only the owner for the full year. You are only holding the holding the shares for the full year. Correct? Do you add this 20 rupees to your share value, or do you sell it without? Tell me, what do you do? What do you do, my dear? Do you sell it at less than 20? I mean, 20 rupees, will you add it or you will not? What do you do? Obviously, my dear, if the share value is equal to, say, share value is equal to 500, what you will do? I holding for already 20, a full year I only was holding. Correct, na? So then what you will do? Add 20 and you will sell it at 25.20. Yeah. What Ravikant must have done? Ravikant bought it for what? Ravikant bought for 520. Correct, na? If 520 you bought means Ravikant has done what? Correct, na? Ravikant would have recorded what? Investment account debit 520. Correct, to cash 520. Yeah. 20 immediately 20 rupees came. Within 2 months mein 20 rupees came. Agree, yeah? Immediately 20 rupees came. 20 rupees, isn't it part of my investment? What I paid only came back. That's all. Is it earned by me? Yeah? Whatever I paid, that only came back. Okay, so what I paid, that only came back. Since that only came back, that's why when you get the cash back, so cash account debit to investment only. 2020 you do. Then it leads to what? What is left in the investment account? What is left in the investment account? 500 is left in the investment account. Really the share value is equal to 500, but it went up by 20 because of the dividend factor. That's why we are reversing the dividend. Right now we'll recognize including dividend. Once a dividend comes, we will exclude it. We will cut it. Only share value. What is left is equal to share value. Like that, we will follow the accounting. Hope, Ram, you understood. Okay, my dear. Thank you. And if you have liked the lectures, right, please share it with your friends. At the same time, yeah, you pass up, you just say one like you put, or you comment on it. Correct, na? Right? And be in touch. And in Unacademy app, do not forget to follow me so that any further future classes you will get a notification if that is relevant to you. Correct, na? Done. It will be useful to, right, you can watch the video lectures. Thank you. Wish you all the very best and see you for special classes, that is group 2 revision classes we look into. Right, my dear.